Good afternoon. Today is Tuesday, February the 7th. The time right now, Singapore is 12:49 p.m. And overnight on Wall Street, there's hardly any firework. The market was pretty tame compared to last Friday's movement. So it was basically just catching up for traders to catch up their breath. Basically, the market was just hovering, especially in the Dow Jones. You can see Dow Jones have not broken out of Friday's trading range. Friday, we have a trading range of 33,581 to 34,334.7. So over the last whole of yesterday, and we have seen the market has been trading within this range of prices without any visible breakout. But I think the odds is to the downside, so do pay attention for a move to the downside as the market evolve over the week. Okay. And over in S&P 500, the market have a new high on Friday at 4,195.44, and since then the market has been drifting lower. Of course, at the point when the market hit the high here, we can see that there was a doji followed by a reversal signal here, and then the market has been drifting lower the whole of last night. And if we get some kind of a decent rebound, somewhere between 4,132 to 4,144, that could be giving us an opportunity to actually position short for the continuation of this pullback here. So do watch out for that possibility. Over in the Nasdaq, we also see something similar. On Friday, we have a high of 12,881, and then the market end up as a doji followed by a reversal signal, very similar to what we saw in S&P 500, and the market continued to extend lower overnight, and then the market closed about there. And then what's interesting, the market closed as a double doji and an inside bar here, so the market is undecided whether to go down from here or to rebound. So if we get a chance of the market to rebound to, let's say, 12,591 to 12,646, I think that would be a great position area of prices to look out for reversal signal and to take a short position for the continuation of this pullback here. Okay. Over in Asia, we can see Hang Seng continue to drop lower. Monday, when see market opens with a gap down and basically traded lower, and so far it is a three-wave pullback. But the fact that it is trading below a support line that has been around since mid-October. So this is the first time the market actually break this support line, and that could be significant. And this morning we can see a bit of a rebound going on, and if this rebound can actually test the underside of this resistance line somewhere around 21,780, that will be a great position to see if we can get a position a chance to enter the short side of this market. Okay. And over the Shanghai Composite Index, we also see something very similar. High traded was 3,310.49, and it pulls back in the three-wave pattern and held just above the 3,223.07. So and this area is actually where the nearest support is. If the market can actually trade below and close below this level, it is primed for an extended decline. So far, it is only a three-wave, and if this market can stabilize above 3,223, there is a possibility the market may go back up again to challenge the 3,310 levels. Okay, so for time being, there is no conclusive evidence to say that this three-wave rally is over, but it's almost there. If it's not already there, then the target is somewhere around 3,348. Okay, so do watch out for another extended move here. But the question is, if we get another extended run higher, how it close will be key, because this is a target, and if the market hit the target and then reverse, like what we saw in the Nasdaq or even the S&P 500, we will get our sell signal. Okay, so I'm still looking out for the possibility of the market topping out. Okay. Over Nikkei, yesterday we know that against the grain, the Nikkei actually rebounded higher, while Asia, meaning the Hang Seng Index and the Shanghai Composite Index were actually declining. The Nikkei actually bumped higher to 27,821, and then it lost the momentum and currently is basically trading sideways. And again, I draw this very acute support line here. This is not representative because it's too acute, but it can give us a sense whether the market can actually stay above the 27,821 like we saw yesterday. And if it cannot, then I think the market is primed to come back down, because so far this is a three-wave. and three waves are always corrective, and we have noted that every high has been much lower than the previous high. So if this is the high for this round, again, this is conforming to the pattern that we are seeing. Every high is getting lower and lower, so that is a good definition of a downtrend. Over in the currency market, we can see the dollar continue to edge higher to a 132.90 this morning, but then you can see that this rebound happens in a corrective three-wave pattern, and it traded into this bracket of prices between 132.44 to 133.63. So this is basically a retracement target levels, and the market hit this pocket and then started to lose momentum and come under profit taking. So this could lead to something much bigger. If this is just a three-wave rebound, and then prices is possibly going to come back down again. However, if the market can extend higher and take out the 133.63 and then extend higher to take out 134.80, that will be the clue that we need that the dollar has finally bottomed out and is definitely geared to trade much higher in the days and weeks and even months ahead. Okay. So the euro versus the dollar, we can see that the euro peaked at 110.33 last Thursday, and he has been coming down very aggressively. Friday, we saw another big move to the downside. This morning, overnight, you can see the low is 107.10, and this market now has a little bit of rebound. So if we get some kind of a decent rebound, ideally to 1.08, let's say 1.0870, for example, that will be a great level. If you ever come to those levels, it will be a great level, but you need confirmation before you can sell it. Go down to the lower time frame and look for the reversal signal, whether it is a shooting star. Ideally it should be a shooting star or some kind of a doji or some kind of inside bar, and whatever the reversal signal is, once the price get into 108.70, if you see something like this, I think that would be our signal to go in on the short side. Okay, at least that's what I would do. Okay. So in the Aussie market, we can see that the Aussie market has also broken a relatively significant support line from 071.58, go down all the way to 068.55, and the market is now doing the rebound. So I've actually given myself a lower target to aim for. If the market can just rebound back to 070, the 70-cent level, I think I'll be more than happy to actually enter the short. Again, it will be based on the idea that we see some kind of a reversal signal on the lower time frame. So that would be my signal to go in and sell this Aussie market, because I also have this opinion that gold prices may have already turned the corner and may be heading lower at least until April. So if that's the case, I think Aussie, the currency that is very highly correlated to the price of gold, may also decline. Okay, so that will be my thesis for selling the Aussie dollars. Over in the sterling have a much deeper pullback. In fact, the market picks up much earlier in the last week of January at 124.48, and the market has been consolidating before it plunges on Friday from 122.66 all the way to 120. So now the market is now at 120. If we get a bit of a rebound to 121, I think the rebound will be pretty weak, but I think if we can do 121, I think it's good enough. And if I can see a reversal signal somewhere between 121 to 121.35, I'll be very keen to take a short position, aiming for the idea that the market will break this rising price channel, okay, that you can see that has been around since last October. Okay, so you can see this market has been around here since last mid-October. So this could be a major price pattern break. Okay, if the market can break this level, I think it will at the very least hit for 117.85, okay, which is where the last bottom, where I think the last demand area is going to be likely to appear. Okay, at the bare minimum, it should challenge 1.1834. Okay, so there's going to be quite a bit of a move here. The odds are not fantastically good, but if I can put my stop just above 122.70, for example, and take my chance all the way down to test 11834, I think that is also something that can be considered. But I think the potential is much bigger than that, because looking at the numbers coming out from the UK, it does suggest that UK could be one of the first major economy to slip into a recession. Okay, and that would definitely be negative for the currency. So over in dollar Canadian, The dollar actually has been running higher, and it went up from 132.60 all the way up to 134.75 overnight, and the market now is pulling back. This morning we have a dip below the resistance line, or the support and resistance. Sorry, it should be resistance and support, and the market now and the last bar that you see here, if this market close around this current price with this pattern here, the market may have already seen the pullback and is primed to go much higher. Okay, so the key to watch will be this level of prices, 134, 135.20. So if 135.20 can be safely cleared, then I think the market is primed to try the next higher level at 136, 136.80 level. Okay, so do watch out for this potential move. In the meantime, somewhere between 133.69 to 133.94, there should be sufficient support here. So if the market give us another chance to buy on the dip, I think we should take it. Okay. Over in crude oil this morning, we have a big move here. Market actually break the January low, okay, of $72.45, go down to $72.25, followed by a reversal signal here. You can see this is a reversal signal, and if the market can pull back somewhere around the $73.60 odd cents, I will be very keen to take my chance to go and buy, put a stop below the $72.25 low, and see if the market can actually break this resistance line. And one clear signal that it has turned a corner is to see the market take out $78 and close above that. Okay, so that will be my cue to go and establish levels of long, because I'm actually quite bullish on energy prices. So if market give me a chance to see a reversal, I will definitely want to take it. Over in precious metal for gold, I have mentioned that gold may have already peaked at 1,959.74 cents on Thursday, and then it came down very aggressively on Thursday, broke the support line, and then extended lower in a total of $100 over a 48 hours window, and this is major. So if the market now can rebound somewhat, okay, I'm targeting something like $1,900. The market can go into this bracket of prices. I'd be more than happy to see if I can get a sell signal to go back in on the short side, because I do believe this pullback in precious metal may last all the way until April. So from now until April, we have at least, because we are just in the beginning of February, so we have at least maybe 7-8 weeks of downside movements. Obviously, it's not going to be down every single day, but generally the price goes down. I think we have a good chance here. Okay. Ultimately, I want to buy, okay, but I'm just taking advantage of the current negative sentiments, and we just want to see how far it can go. Ultimately, I want to go long and keep long. Okay, so for the time being, we just go with the flow. Silver as well, also peaked on Thursday at $24.64 and climbed and fell back all the way to $22.15 overnight, and we can see a bit of a rebound currently. And if this market can go back to somewhere around $23, that will be a great level to consider repositioning short for, because I think this move down is led by gold. Same thing on the way up, it was also led by gold. On the way down, it was led by gold. So I think we will take the cue from gold market. Once the gold market started to show signs of stabilizing, that's where we need to get out of silver as well. And I suspect the next rally is going to be led by silver. Okay, so do watch out for both precious metals. Over in the crypto space, we can see the market has been consolidating, taking its cue from the US equity markets. Since the beginning of 2023, we see that the very high correlation between the Nasdaq 100 and digital assets. Every time the Nasdaq rally, digital assets also rally. But we have beginning to see early signs that perhaps the US equity market may have already topped out and is getting ready to decline, and maybe even resuming its overall downtrend from last year. So if that's the case, I think the prospects for lower prices in digital asset is very, very high. But for the time being, there's no real evidence to suggest that this market is getting ready to reverse. Maybe it pulls back a little bit. So far, it's just been very corrective. For Bitcoin, the high trader is 24,246. And the price right now has been hovering just above the $22,560 levels. Okay, you can see this near-term bracket of prices between $22 and $300. Sorry, $22,300 to $22,560 is forming some kind of a base, and if this market is taken out, if market take out $22 and $22,300, maybe the next level of support may come in from the 20,400 levels to the 20,230, maybe 40 levels. Okay, so this will be the next bracket of prices in which I suspect that there will be demand re-emerging from here. Over in Ethereum, we are seeing somewhat similar movements. We have a high last Friday at 1,713.8, and the market has so far did a 3-wave pullback, and this is the bare minimum we can do. And if we continue to slide lower, the nearby support is at 1,535. So do watch out for these levels over here. Market still have a chance to rally, and maybe after this 3-wave pullback, maybe it's getting ready for another surge. So look out for the market taking out this resistance line for clues that the market is going to resume its recovery. Okay, over at Ripple, we are seeing a 3-wave pullback very clearly. And if this is the case, market may go down to 0.37 and this is where I think the next level of support may actually emerge. And coincidentally, the last low here on January 23rd was at 0.3686. Okay, somewhere near the 0.37 levels. So again, collectively, I think this bracket of price could be significant to hold the market if there's going to be another slide in Ripple. Over in Cardano, we are also seeing a bit of a pullback, although we do see somewhat of a break below this support line. It could be significant, it could be nothing, okay, but so far it's just one of the signs. And structurally, the way it comes down from the high of 0.41 that suggests it's still corrective in nature. The nearby support is 0.37 followed by 0.35. So between this bracket of prices, we should see some decent buyers returning. Okay, so in the meantime, we just have to watch. Same thing for Solana. We have a 3-wave pullback, and nearby support is $22.20 to $20.40. And if we do a 3-wave equality measurement, market may go down below $22 momentarily to $21.89. So this is the equality move here. So by and large, this structure is still very supportive for the bullish case, at least for the near term. So do watch out for any big move, especially coming from US equity. If we see a big move in US equity, whether to the downside or to the upside, that will ignite another similar move, or what we call corresponding move in the digital asset space. That's all I have for you for today, and tomorrow we'll continue this update. Bye bye, take care.